Hello, this is Mike Swanson. You're listening to the Wall Street Window podcast. I've got a very special guest with me today. I'm speaking with Ike Iosif, who runs the website marketviews.tv. If you've been following my stuff, you should know Ike because I interview him every once in a while, and I'm happy to be able to do so today with all the crazy gyrations in the market, and he's able to take some time out to talk with us. How you doing, Ike?
I'm doing well, Mike. Thank you.
Well, we've seen, I'll just ask you, with all the crazy market action, how are you doing?
I'm dizzy, to put it mildly, and I have seen waterfall declines in 2000, after 9/11, in 2008. This one is just as breathtaking, if not the most breathtaking I have experienced since I started my career in the business.
Yeah, I definitely. I mean, the only thing I can compare it to that I've seen or experienced is drops in gold stocks. And it reminds me a little bit of how they started a bear market in 2013 when gold broke 1550. But as far as the way the stock market came off the top, I mean, it took me by surprise. All the other bear markets, it had double tops, or you had a drop like August 2007, and the crash didn't happen really for another year, so you had a long time to figure out what was going on. This one, it's so fast, there's no time to really think. You have to kind of really be experienced to deal with this situation, I believe.
Yeah, and also one must take into consideration that we're dealing with a thing, a situation that we haven't dealt with before. So that makes it even more challenging.
Well, one thing that's kind of I really want to mention was going to tell you before we started recording, but I thought, well, I should say this to everybody. Being in the United States, one thing that is kind of spooky, and again reminds me of the gold stocks, is in the past couple years when the market would fall 20%, all the last couple times I would get a phone call from someone, not always the same person, but at least one call, sometimes multiple phone calls from people that know me personally. They're not following me on the internet or my website. They're just people, and they would be scared. These would be retirees, not traders, not people typically looking at their accounts or following things, wondering if they should get out because the market had fallen 20%. And then these calls almost always coincided with, or I think they did every time, with the day the market bottomed. And this time, nobody has done that. In fact, I've gotten 2 phone calls in the past week of people asking if they should buy stocks. Someone telling me they don't even have an account. They're wondering if they should open one up and start buying. And on my Facebook, I see people locally talking about buying and stuff, and that's to me is very spooky, and also reminds me of the bear markets and gold stocks because there was a lot of similar talk or denial that the trend had changed for a very long time until the last third of that bear market maybe. So that's kind of spooky to me. But what are 3 things, or what's got your attention, I should say?
Well, actually, with regards to the markets and all this crazy action, let's try to put things in context. Now, when we look at the markets, we look at the fundamentals, we look at the technicals. And right now, on the fundamental front, we have 3 different scenarios: the good one, the bad one, and the in-between. The good one is the one like all this is over within the next couple of months, and we just have a very sharp contraction that lasts 3, 4, 5 months, and then the economy begins to recover. That's the best case scenario. In that case, I can see the market bottoming out somewhere between 2200 and 2350. The bad scenario is the one where this goes on for 1 or 2 years, and along the way we also have lots of collateral damage, such as corporate bond defaults. If that scenario was to take place, then I think 12, 1300 in the S&P a year and a half from now is not an exaggeration. And if we have the in-between scenario in which we don't have a major escalation in deaths and it doesn't drag out for 1 or 2 years, but on the economic front, things do not come back as fast as people would expect. In that case, I can see the S&P going down to the November 16 lows around 1800. Okay. Right at this moment, we have no visibility with regards to which one of these three fundamental scenarios is going to play out. On the technical front, we also don't have any visibility, because in order to have visibility in technical terms, you need two things. You need the technical readings and you need the indicator pattern. All we have right now is some very extreme technical readings. That makes it interesting from a statistical point of view to say, oh, this hasn't happened in 20 years. Oh, this hasn't happened in 50 years.
Yeah, there's one thing I like to say about that. In 2008, twice the market fell to a point where I thought it could crash, turn into a crash like 1987 or 1929, of big one-day drops. And the first time was January of that year. The market actually fell 20%, and I tried to buy Friday before Martin Luther King Day, and then the market was closed because of Martin Luther King Day. But in Europe, everything was collapsing, and our market was poised for a huge gap down. The Fed cut rates, and then it rallied for a few months. But I was scared that it could crash, but they cut the rates and it went up. And I was scared because I was long. I'd bought for just a trade the day that Friday before, and it didn't. But in 2008, even though there was it started, the selling really picked up in September, when the market fell below that low set in January and started, picked up, and the crash everyone remembers is what happened, I think, in October and early November. But on the I was, at that time I was short and profiting from the drop. But on the day it bottomed, I had gotten out of all these short positions, and then the day it bottomed, the very day in that October-November period, I actually bought maybe an hour before the bottom or something. But I got so scared of the market, I just got out. Yeah, and it went up. But I was scared because many indicators were past levels that appeared to be normal, and I thought if it didn't turn around, it would collapse or something. And I think the same thing happened on last week on Friday. The market fell 20% in the United States and did not bottom, and then we had the Monday gap down. So I think we're in this strange thing where the indicators basically, we're in some sort of, I don't know if it's a crash process, but the indicators don't work, and because everything has been breached, and then you're like in a black hole, is the way I feel.
Well, yeah, that's why I said on the technical front, we don't have visibility either, because all we have is some extreme technical readings, but we don't have yet a pattern. Okay, so without this, we don't have any visibility, and we can't really draw any conclusions other than some interesting statistical points. So as we speak, we have no visibility on the fundamental front. We have no visibility on the technical front. That makes for a very different market and a very difficult market. Okay. Now, three things that have gotten my attention the last few days are these. First of all, the Fed announced a $1.5 trillion injection. And I don't know how many people know this, but the 2019 U.S. military annual budget was 693 billion. So the Fed announced a cash injection the size twice that of the annual U.S. military budget. So I'm wondering, did they panic, or do they have information that indicates to them there's Armageddon coming? Because we have just committed twice the size of the U.S. annual military budget to combat this situation.
It's the level of that TARP thing.
Yes, okay. So the next thing that also has gotten my attention is this. I do not know how many people follow TLT. I believe many, because many trade it. And TLT, from a high of 180, is trading right now to 152. It's down 15% in just 6 days. If you look at the yield on the 10-year bond, right now it's at 0.96. It got as low as 0.40. So it's twice the level it was just 6 days ago. And also it's not all that far from where it was when the market topped. When the market topped, the yield on the 10-year bond was at 1.37. Right now it's at 0.96. Yet, yes, it is 30% lower, but the fact is the last 6 days interest rates have bounced sharply from the bottom. And that tells me that the ability of the Fed to further manipulate rates down is limited. And if I was to see TLT rallying near 180 again, I would short it. The third thing that also has my attention is this. I read a very interesting study from Dr. Anagностopoulos from the Imperial University of London. He is a statistician with expertise in crisis simulation and modeling. Now, by studying the data that they have so far, okay, the three conclusions that they have is that A, it's more serious than the flu, and we know that. B, it is transmitted easier and faster than the flu. And third, and the most important, is that the majority of the cases have yet to occur. And all these three actually confirm what I have seen happening in Italy. You know, here in Greece, we don't have borders with Italy, but it is a neighboring country. Athens from Rome is only an hour and a half by plane, okay? And we have been getting news about Italy 2 and 3 times a day the last 4 or 5 weeks. And 3.5 weeks ago, they had like about 150 confirmed cases. And from that, in 3.5 weeks' time, they went to a complete lockdown of the country. The picture that I sent you, which is amazing, is from St. Peter's Square at the Vatican in Rome, one of the most visited places in Rome, and it's completely empty. And the Italians got there within 3.5, maybe 4 weeks. So even if what we have ahead of us is the best scenario, where like we only have a sharp contraction in the second quarter and then things from there get better, even if that is the case, the worst is ahead of us about 2, 3, maybe 4 weeks. So with that in mind, and with the fact that I said, the Fed, announced the injection of $1.5 trillion, which is twice the size of the military budget. When you put it all together, I'm suspecting that perhaps the worst is ahead of us. And that means the worst is also ahead of us for the stock market.
Well, I'm in the United States, and I think if listeners don't know, you're located in Greece, so you're in Europe, and right next, your country is right next to Italy. So I think you're getting this news quicker. People are probably much more aware of what's going on where you live than they are in parts of the United States. In some places, they're already seeing it. Washington State, New York, other states, not so much. So I'm assuming it's going to pick up here too, and you're seeing this first. So what is it you think we can look forward to in the United States? What's coming, I guess, is a better way to put it.
Look, Italy, in terms of population, is the size of California, 60 million people. In terms of GDP, is the size of Texas, 1.8 trillion. If things develop the way they developed in Italy, and I hope they don't, just imagine the entire state of California or Texas being quarantined and locked down. Like I said, I do not know if we will get there. But to find out, we have to wait about 3-4 weeks. And that is what people, I think, need to keep in mind, that the next 3-4 weeks will be treacherous. Now, I would like to suggest to people who are listening to us, I have done lots of reading the last few weeks, and there's one of the greatest articles that I read on this subject is written by Professor Tyler Cowen. It's titled, "The U.S. Economy is Now in Uncharted Waters," and you can find it at Bloomberg Opinion. So if you Google Tyler Cowen, "The U.S. Economy is Now in Uncharted Waters," you should be able to find it easily. It's a great article, and I think, in my view, it's one of the most accurate that I have read, and most and approaches the whole matter in a very logical and scientific way. So I would suggest to our listeners they read that article.
Okay, I'm going to find it myself. I haven't read it, so I'm going to read it immediately after we get off this, and I'll link to it also. Is there anything else you think we should add?
No, Mike, other than, as I said, with no visibility, either on the fundamental front or on the technical front, you can't make any decisions. And it is an exercise of futility for people to be saying, oh, the market is going to bottom there, here, or whatever. Actually, there's 3 scenarios. If the best scenario takes place, I can see the market, going down to 2350, maybe 2200. If the worst scenario takes place over the next 12 to 18 months, then we're talking about 1200, 1400 in the S&P. And if the in-between scenario takes place, then we could easily go to 1800. So once we know what the fundamental situation is, once we have visibility there, then we'll combine it with technical visibility, technical readings plus patterns, both in price and in the indicators, and from there we can state an opinion that is, in my view, would be better quantified and qualified.
I agree with you 100%. The week before this one, I was trying to play a double bottom pattern for the Dow, or a potential double bottom pattern, and it failed. and now, as you said, there's no good pattern to play, and so it's best to wait till something develops, I think, or else trying to play this market, I think, is like fool's gold.
I agree.
So, well, but in the end, this isn't going to last forever. So, we got to keep on top of things, and there will be opportunities out of this. So I recommend people go to your website, marketreviews.tv, get the guest interviews and your work, because I follow it too. Thanks for taking the time out to talk with me and everyone else.
My pleasure. Let's talk again in about 3-4 weeks.
Thanks.
Carmine Savastano, Human Time Bomb, The Violence Within Our Nature, poses significant questions and considers the evidence that violence shapes the past and present. Author and Professor David T. Beato calls it an impressive tour de force. Savastano shows a mastery of relevant work in biology, anthropology, and intelligence. Each chapter will challenge readers to rethink old assumptions. Doctor of Psychology R. Blackstock notes, "It is a long, hard look into the potency of our collective shadow that is extremely relevant in today's socio-political climate." Historian and author Larry Hancock declares, "This work is a slap on the back of the head, a wake-up call, and a serious reality check as to the true human condition." Order your digital and print copies now on Amazon.com. For more information, visit tpaak.com.